Hey guys, what's up? It's Austin Booley, and today we're going to cover the top pattern of 2018. Of course, there are a lot of patterns in the stock market, but this is my favorite, and overall, this is the one I always consistently trade. So, with that in, I made a slideshow, so we will go over that now. You won't be able to see my face, but that'll be okay. Alright, you can still hear me talking. Alright, so top stock pattern in 2018. Just a few memes here. But I'm not as good as my last trade. There's just a saying that you're only as good as your last trade. I thought that was funny. And first time day trading with 2K, and it's gone. So hopefully with these patterns, guys, and things that you'll learn today, that will not happen. No guarantees though. So this is pointer. Okay, so I just wanted to include this just so y'all know. It's a quote. It's on average the most successful traders trade 1 to 2, 3 stocks. I will include in their stocks, ETF, or indexes for their whole career. So this is because when a trader watches the same stock move over and over, they develop a natural intuition/gut feeling for how the stock will move. I focus on SPX, so a majority of my examples, I think actually all my examples, came from SPX. However, this pattern works in almost every stock. Alright, so what is the pattern? It is the triangle breakout pattern. That is what we're going to look at. It is mainly a continuation pattern, so we have an uptrend or downtrend, triangle form, and then the continuation of that. So why does this pattern work? This pattern has been around for decades, so everybody looks at it, and when everybody wants something to happen, it happens. That is true of the stock market. It is based off support, resistance, and trend lines, which is the fundamental basis of technical analysis in the stock market. And they occur almost everywhere. However, they are mainly continuation patterns. Alright, so here are the different forms of the triangle pattern. You have the symmetrical triangle. It can break out to either side. Of course, I'll show you later how we can tell, have a good natural a good guess, I should say, on which way it will break out. Then we have the ascending triangle breakout, is breakout to the upside. Of course, you will always have a fake break and it'll go back down, but more times than not, the ascending goes up and the descending goes down. Alright, so here's an example of the ascending up triangle, the ascending triangle pattern. It was actually not in a continuation, it was a reversal, but we have the candles bounce against a resistance/top line 2 to 3 times. Here's our top line. We have 1, 2, 3, breakout, okay? Candles are forming higher lows. What does that mean? When we have a low here, we have a higher low because it was higher than that one, and then we have a higher low because it was higher than that one. Higher lows with a solid top means we're condensing. The candles are squeezing into the edge of the triangle and break, and is the candle squeezed into the edge of the triangle and breaks out. The EMA line, or the blue line, points up as it breaks out. The entry is right before the breakout, so right here. Why? Because it's the best risk to reward. If we enter here and it goes back down, and we would wait and would cut losses at the break of this line, then we have this much risk. If we enter here, we have this much risk. So obviously the risk to reward is a lot better to enter right before the breakout. Exit is at a next resistance, or the cross of the cross below the EMA line. So obviously our resistance line was here, so we knew that was our target. So we went, it just followed on that EMA line, hit the resistance. That was a perfect exit. Example number 2 is the descending triangle. So candles bounce against a support or bottom line 2 to 3 times. So 1, 2, breakout. Okay, candles are forming lower highs. What does that mean? We have a high. This high is lower than that one, so we're having lower highs. Lower high, breakout. This means that candle squeezed into the edge of the triangle and breaks out. The EMA line, or the blue line, points down as it breaks out. Entry is right before, again, for the best risk to reward, because if we want to exit for a loss, it's going to be at the break of this line. That shows that it's going to break our pattern. So if we enter, here or whatever, then we have a lot more risk exposed at. Of course, our exit is at the next support, or the cross below the EMA line. So as you can see, our support was here. We're clearly just having a flush through this level down to this next support level, which is our exit. Now we're on the symmetrical triangle. Candles are forming higher lows and are forming lower highs. So we have the higher lows, and we have the lower highs. So basically the candles are consolidating and squeezing into a triangle, basically waiting for a breakout. Candles cannot squeeze into this narrow of a space and not go somewhere. So obviously the ascending triangle can either break down or up. In this case, the stock or SPX gapped up in the morning. A gap up usually leads to a sell-off because people were long, so they decided that it was best to cover their positions. But of course, it's a gap up, so other people want to participate. So we knew the long-term run was going to be up. So as you can tell, we form another flag pattern at the top. And then we go and we approach this resistance line, and that would be our exit. Alright, practice. What type of triangle is this? Is it ascending, descending, symmetrical? What is the projected breakout direction, upwards or downwards? And what is your exit target? Alright, if you want to take a few minutes and pause this, draw your own lines on it, do whatever you want. I'm just going to continue because you can pause the video if you'd like. Alright, so this is what happened here. We see that we're forming, it's getting lower and lower. So this one looks like it's going to be an ascending because this is a top line, but then our next one makes a lower low or a lower high, so we know that is actually slanting down. These are forming higher lows, so we know we're squeezing into a breakout, and as we can tell, if we can go back to the past one here, is a previous downtrend. What did I say? I said triangles are more than not a continuation pattern. So we go down, we have this consolidation into the triangle, down, consolidation into the triangle, and obviously the EMA is pointing down at the breakout, so we're going to see a break lower. Our target is going to be this next support level. Of course, if this was a continuation upward to consolidation, our exit would be here. So it's a symmetrical because of the lower highs and the higher lows. What is the projected breakout? It's the downside because this is in a downtrend. What is your exit? The next support line, which is the red line on the bottom. All right, this is not a how to draw trend lines video. This is how to master the triangle pattern. So this is just a quick thing on how I draw trend lines. Trend lines are used to find the best exits. I could also include in there also the best places to enter. To draw key levels of support and resistance, use the 180-day 4-hour time frame. Key levels of support and resistance is where a stock has bounced before or a point where the stock has trouble going above. Now, what's also helpful to know with the triangle breakouts is your candlestick patterns. The most important one is the hammer, the doji, the shooting star, and the doji. Of course, these are all useful stuff you should know, but these are going to be the ones that we're going to be talking about today. So hammers and dojis are indicative of a reversal from downtrend to uptrend. So we have a downtrend, this candle forms, and then we shoot up. Shooting star and dojis are indicative of a reversal from uptrend, candle, to downtrend. This is good information for exits and entries. Here's an example on SPX. So we're going up, then we go down, we cross below the EMA line that signifies a downtrend. We have this hammer here. It's not necessarily a doji, but that more looks like a hammer. We go up, we have a shooting star or an upside down hammer, and then we change direction. This is an example of a hammer and a shooting star reversal. These reversals are more likely to occur at a support and resistance level. Note that this is very important, because if you would have waited and you're like, oh man, there's a doji there, we're reversing. No, it happens at key support and resistance levels. Uptrend and downtrend are confirmed by the direction of the EMA points. Okay, so just a quick information on this EMA line I keep talking about. The EMA line, or the exponential moving average line, is the average price of the last X candles. For example, an 18-period EMA is the average price of the last 18 candles. but since it's an exponential moving average, there is more weight being applied to the current price. The EMA line is indicative of the trend. If candles are above the EMA, then it is in an uptrend. If it is below the EMA, then it is in a downtrend. While in an uptrend or downtrend, the stock will bounce off the EMA line and continue in its normal direction. Since nothing goes straight up or down, candles tend to bounce off the EMA line as it follows its trend. So let's look at an example of a downtrend EMA. While in a downtrend, the candles bounce against the EMA and continue down. When the candles cross above the EMA, the stock is no longer in a downtrend. So as you can see, it goes, it bounces, it gets close, it gets rejected, it has a strong pullback, gets rejected again, and then we finally form and we go and we switch switch the direction of the trend. The EMA is a good indicator of when to stay in or exit a trade. If the candles bounce, then stay in the trade. If the candles cross above, then exit. Now it's an example of the uptrend EMA. While in an uptrend, the candles bounce on the EMA and continue up. When the candles cross below the EMA, the stock is no longer in an uptrend. The EMA is a good indicator on when to stay in or exit a trade. If the candles bounce, then stay in the trade. If the candles cross below, then exit. So we have a triangle breakout here. We go, we shoot up, we have the support. We go, do we exit? No, because we're waiting to see if it crosses below the EMA line, then we exit, but it bounces. This would technically be an exit, but it did bounce. And then here, obviously, we have a lot of indecision going into this resistance level, so that is why it turned around there. Oh, example time. All right, so let's go back to this. All right, so I pull up an on-demand showing you an ascending triangle here. This was the morning trade. This was a symmetrical triangle. I explained that in the slides. This is the example that I used for the morning where it gapped up. This is what happened later in the day. Okay, so I just want to show you all what will happen here. Okay, so if I'm going to trade an option on this, look at this option. Looks like the average is about 287. If I just take one trade of 287, one contract, entered. Okay. Sorry guys. So now let's watch the movement here. It is, and hold on, is it 3 times faster? Play. Fast forward 3 times, yeah. So now it's 3 times faster. So of course it will not move this fast, but this is 3 times sped up. So you don't have to wait for it forever. So this is an ascending up triangle, which is, I said most times it is a continuation pattern, but we're having a downtrend and then we're having ascending up triangle because this line is ascending up. Now if it was downtrend, we're going to see a downtrend reversal, or symmetrical, we would assume a downtrend, but it is showing the ascending uptrend. So here we go, we entered there for, we're testing this line. If it doesn't want to break this line, then that's where we'll exit because we know that it's going to go back down. But we had a strong push up. Let's see what happens here. And we're getting the break above. Sorry, you guys have to watch this. It's so boring. But I just want to show y'all what it looks like in action. Obviously, we get the break up. And that's how the triangle is confirmed. Now, what is our exit? Our first exit is right here because that is where that's a previous spot where it bounced at. So this is going to be our first exit spot. If it breezes straight through that, then this will be our next exit. Okay, just so that we don't waste time, I'm going to speed it up here. I'm going to go 10 minutes ahead. Okay, so as you can see, we shot up. It's testing this line to make sure it's a good support line, and we're having that bounce off this line. It's still staying above the EMA line, so we're going to still stay in this trade. Oh, we're having that break up. Let's go 10 more minutes ahead. Alright, so as we are approaching this resistance line, we're having some consolidation here. We're still above the EMA line, so we're still going to hold in this position. We got in here for the best risk to reward scenario, so we're still going to hold this. See, I'm gonna have to change to 14 now. Oh. I don't exactly know how far we go on this. All right, so we break down. We're still holding this EMA line, so we're still going to stay in. Obviously, if you wanted to take profits here, I understand, but I just want to capitalize on the full potential of this trade and wait for that EMA bounce. If we don't have that bounce, then we exit, and that's okay because we still have a small profit. Okay, I don't want to keep you off forever. Okay, so long story short, we had that bounce straight off the EMA. We hit that resistance line. That would have been our key exit point. Let's go to trade. Let's see where we're at. Dang. Oh, I had 10 contracts. That is why. Create closing. Well, I guess I can talk about it. I accidentally bought 10 contracts because it's automatically assigning you 10 contracts. But when we entered at $2.83 a contract, or multiply that by 100. You spent $283 to get into this trade. This is now worth $535. So that is a 50% gain almost. And with 10 contracts or $2,830, you make $2,370. So let's just exit this. I just wanted to show you all how that worked. It was it was basically 100% gain there at that top resistance line. So let's see if we can. Of course, we'll get it there. It's paper trading. But that is the example that I was going to show. Obviously, if you're trading options for this triangle breakout, you're going to get a huge percentage. But if you're trading the stock-wise, you're talking about a 0.4%. But this also works for penny stocks. This works for other stocks. This works for blue chip stock. This works for everything. This is the top pattern of 2018, obviously, in my opinion only. So let me get myself out of this. And once again, you won't be able to see me. So that was the example. I don't know why that's cut out. Sorry, I didn't test this before. So it says, now you can trade. Take your trading skills to the moon with the triangle pattern coupled with the assistance from charting techniques in the EMA line. So thank you all for tuning in. I know it's going to be a long video. I don't know where we're at right now, but it will be long. You can find me, Austin Booley, at this is the Discord that I run. It's full of options traders who do day trading, swing trading, strategies, everything that you want to learn. We call out great plays throughout the day. Hope you can join. Please subscribe if you like the content, and see y'all around. Thank y'all.